Make sure to check your options when getting your next home loan. Way too often I see home buyers and homeowners that get too confined with just one option and they think that's it. And little do people know there's so many different varieties of home loans across the country. That's why we're built the way that we are, with hundreds of different banks and lenders. I don't work for the banks and lenders, I work for you. And this is how it works. So just the last week, here's a few examples that I think kind of paint the picture. We had a family moving from Georgia to Kansas City, building there forever, their dream home. And when the first appraisal came in, it came in light. There were some add-ons, additions made. The seller's listing side didn't provide the addendum, so the appraiser didn't know. Anyway, usually with most banks and lenders, it's kind of screwed. The value's low, the buyer would have to come up with the difference or try to talk the builder into coming down on their price, which probably isn't ever going to happen. Instead, we were able to pick that deal up, move it to a different investor of ours, get a brand new second appraisal, and close the deal with the full price value. Everyone was happy. We also had, for example, a bank statement loan where the seller was on title for less than 90 days. And on a bank statement loan, it's a weird, funky, creative, critiquing rule where the seller generally has to be on title for at least 90 days. 99% of even the unique banks and lenders don't do that deal. We were able to pivot to an investor of ours that does allow the seller to be on title for less than 90 days on a bank statement loan and close that deal. I had a previous client of mine that's self-employed, chiropractor, does really well for himself. I helped him a handful of years back, and he came back around, but he needed a bank statement loan and didn't think that we did those. Well, little did he know, we have the widest variety of bank statement loans. So, for example, he was already pre-approved with another lender and had a great interest rate. However, we started looking at the details. They were charging outrageous, cost and fees to him. So we went ahead and compared apples to apples, and for the same rate, we were $9,900, $10,000 less in points and fees. So it saved him and his family a substantial amount of money because he looked at his options. We had a family reach out to us online. They were wanting to buy a property that needed work with a hard money loan. Those are high rates, high fees generally, not the most desirable of loans if you have your options. Well, we just assessed the situation. We saw that her current primary residence was free and clear, so we just did our instant HELOC on that to get her better financing, a way easier process, lower fees, and she had the cash within a handful of days. So we were able to pivot because we had options. We even had a family that was under contract going FHA, but they needed to add the wife, the co-signer on to make the income support the loan, but the wife already had an FHA loan and she was holding on to that property. You can't have two at the same time. So we pivoted to a conventional loan to help that family close. So it's over and over and over again. We're able to kind of shift and pivot and find the solutions, and that's why options matter when you're getting your home financing.